Good afternoon and welcome to today's webinar. My name is Simon Smith and I'm Head of Research here at FxPro. This webinar is really aimed at those of you who've never really ventured into the world of automated trading, and I know that can sound intimidating. Maybe you have to be a programmer or a rocket scientist to get involved. But what I'll show you in the next 30 minutes is not the case, and not only is automated trading accessible, it's also a highly powerful tool which you can use to improve your trading results. And of course, as an agency broker, given that we're not a market maker and taking the opposite side of trades of our clients, we're incentivized to build such tools to help you become a successful trader. Before we go in, just a disclaimer which relates to our Algo products, and essentially saying that FxPro can be held responsible for any inaccuracies or losses as a result of installation of any expert advisors as are known on MT4 or other trading tools, etc. Within the software you can get involved, so you should find a drop-down panel which from there you can access a Q&A window, and during the webinar, if you want to keep your questions related to the content I've presented, that will sort of help us maintain the flow and keep on topic. And I'll address those along the way. And also at the end, if you have any more general questions, you can post them in that Q&A window. It's worth pointing out that all questions posted in the Q&A are only seen by myself, and I will answer them verbally and anonymously. And also, this webinar is being recorded and will be put on YouTube, but again, there won't be any revelation of names or etc. within that. So just for the next 25 minutes, which I'm going to talk and leave 5 minutes for questions at the end, just want to run through what I'm going through. I want you to understand what exactly algorithmic trading is, and also hopefully show you that it's not necessarily as frightening as it sounds. I want to show you the main advantages of algorithmic or programmed trading, and just walk you through three simple examples of its application. And hopefully show you that you don't need to be a rocket scientist to get involved, and point you towards some of the next steps that you can take. And this webinar is the first of a series that I first did back in August, or we're going through to September, looking at automated trading. So it will be followed later in the month and next month by others that lead on from this. So this is really sort of aimed at those for this is really the first time. So an algorithm, it's nothing more than simply a set of rules. A rule can be anything. Obey the speed limit. I will go to the gym 3 times a week, and I guess in January a lot of people are trying to do that. Or I will walk to work. And an algorithm is really just combining one or more rules. So maybe an algorithm could be I will go to the gym 3 days a week unless I'm on holiday. I will walk to work if it's sunny. So it's combining those rules together to make a sort of set of rules, which we call an algorithm. And you can see it's a set of conditions that lead to a decision. So on that level, it's quite simple, but a few things. Humans were not always good at living with rules, and I think it's maybe especially again relevant now as people set out their New Year's resolutions on the first week of the year, and probably most of those would have fallen to bits by the end of January, if not before. So you don't need to tell me that you might have a rule that you're going to go to the gym 3 days a week, but you probably struggle to do that for various reasons. You may say, I'm going to get the bus to work even when it's sunny, because you're running late or you're just feeling lazy. So we're especially bad at rules that we create ourselves, and again, I think the time of year is going to show that one out. But the bottom line of this slide shows that algorithms are simple. It's just dealing with rules and a set of rules and putting them together. So from that perspective, there's nothing difficult about it. So that leads us to algorithmic trading, which is literally and simply basing the decision, usually the decision whether to buy or sell, on a set of conditions. But also, as I said, it's usually the decision to buy or sell, but that's not the only aspect of trading, and it's just as important to apply them on to other aspects of trading, as in accounts, equity, etc. So risk management. So simple examples, I will buy 2, you'd have to set that out, but I'm being very simple here. I'm being very easy. So I will buy 2 if the price is higher than yesterday's close is a rule. It's a condition, how much, and a condition, and then what you're going to do. I will sell 1 because you have to tell it how much, and if the price moves below the 10-day moving average. Again, very simple rule, of course. Not saying this is a good rule at all, but far from it. But just really showing that the underlying principles are pretty simple. You might have another rule which say I want to close all my trades if my equity falls more than 10% on my open positions. But again, another rule. So really just showing that algorithms are simple, but of course, like a lot of things, you can make them as complicated as you want. So just to recap, as I said, this is really sort of going through the basics. So recapping, making the point. Algorithms is not complicated, it's just a set of conditions that lead to an action. I don't know, we probably process a lot of algorithms in our daily lives, and we do them in our head and probably not written down. But a trading algorithm is simply the same thing, but applied to trading and obviously written down in an algorithm that runs on your account. But most importantly, 3 things. It's going to trade without your intervention. So once these rules are created and also back tested, that's something for future webinars. You can sit back, and provided they are properly set out, it will trade on your behalf. Obviously, it's going to trade 24/5, but that means through the night. There's no missing trades because you're asleep or making coffee or anything else. Another thing you may see more, it's your trading algorithm. It won't listen to you or your mind, obviously, unless you switch it off. It may sound bizarre, but that is a good thing, and I'll show you why in the next slide. Maybe I've sort of made this point before, but just emphasising, and I want to emphasise the shift that happens here as well. That I said as humans we're not good with the rules, and you'll see that in January as everyone comes out with these great New Year's resolutions, which all go to pot, as we say in England, within a matter of weeks, if not shorter than that. I guess also as humans, we like to be right, don't we? We like to sort of crave praise and boast, when we are right, which quite often, and the statistics show this on our own trading accounts, leads to the closing of winning trades early. If a trade is in a profit, quite often these are closed relatively early, and certainly a trait of not so successful traders. On the opposite side, we hate to be wrong. We struggle to accept. We want to wait to be proved right, and that again is statistically shown in all different ways. That traders will keep losing trades far too long. Blame the market, etc. It's a loss aversion, which has been shown in various academic studies. We are, as human beings, we like to avoid losses, but also that can lead to actually waiting for losses to turn into profits, and often with very dodgy rationale for that. But also we're irrational. We can behave very differently to a similar situation depending on mood. So, just depending on this, how we can face exactly the same set of circumstances and make different decisions depending on our mood, time of day, etc. So we also make bad decisions under pressure as well. So we're not in economics. We always say the first assumption we make in basic economics we're rational human beings, rational consumers, but people are often not rational. Compare that with successful traders. They always have a plan. There's an old saying, if you fail to plan, you plan to fail. And for many, a plan means a set of rules, and the natural step from having a set of rules is to actually build those into an algorithm. And it's not as scary as you perhaps think, as I've shown. We don't dwell on gains. Successful traders will, they'll move along. If that's a successful trade, they'll note it, but they're not going to sort of necessarily boast about it. It's also successful traders will accept losses, and also accept them as part of being a successful trader is learning how to accept and deal with losses, and also, most importantly, plan for them before you trade. But also successful traders, one of the keys to algorithmic trade is removing emotions, because a lot of what you see on the left-hand side is to do with the emotion of trading, tips of when the emotions get in the way of sticking to rules, and the emotions get in the way when we're right, and the emotions get away when we are having a losing trade, and we're irrational, we're emotional, and can react different ways to the same set of circumstances, which leads to irrational behavior. So all of the removing emotions covers all of those things you see on the left hand side. So algo trading really does help to actually push you from the left hand side to the right hand side. Our own data, which we did when we sort of launching our algos trading tools, really showed this, which showing the proportion of EA trades. So EA stands for Expert Advisor on the MT4 platform. So showing that pretty consistently the percent of winning trades per month is higher those using algo trading versus those who are using manual trading. The next chart shows in a different way the percent of winning clients per month. Those who are using expert advisors consistently higher than those who are using manual trading. And of course, this is done on a P&L basis. And another way of saying that is basically the algo traders have around, on average, 5 times higher P&L than those who don't use an algo system. I talked about at the beginning working through 3 different examples. Now they're blindingly simple, and I'm not saying these are good trading strategies, of course. What I'm saying is I'm keeping them simple so that things you should understand, anyone can understand, even my mother, and can illustrate the simple algo strategies. So first, the decision when to buy and sell. So let's do a simple indicator, which is a moving average. I've chosen it because it's simple and understandable. So let's take, again, just to illustrate a moving average, we're just taking the average of today's price and the previous 4. So on here, we have a moving average here, which takes the average of those 5 numbers because it's a 5-day moving average. And the next day we gain 2 in our calculation, but we lose 5. So that's why the moving average has moved down to 4.6. So a very simple concept. So we put 2 moving averages on this daily chart. The red is a 50-period moving average, and the yellow is a 200-period moving average. Note this one's smoother, so it's often referred to as the slow moving average, just because it's slow to react to what happens on the daily price on the green line. It's a bit sleepy and sort of eventually catching up. Whereas this one's a faster make. You can see because it's a shorter period average, it's a bit more snappy in terms of reacting to what happens on the spot price in the green. So a simple strategy is, again, I'm not saying this is good, it's simple to illustrate, is to sell when the fast moves below the slow. And also then to close that sell order and open a buy when the opposite happens, i.e. the faster MA moves above the slow. Remember, in your algo, it's stupid, so you'd have to tell it how much to sell, and tell it to do this only once when the condition is met. So not to every time this condition will be met all the time. The fast is below the slow all the time, but you have to then tell it just do it once. Again, just making the point that you have to sort of cover every base. So really a simple example of a trading algorithm. And of course, I make the point. I'm not saying it's good, and we'll deal with that in future webinars. The second one is of preserving capital. If I've seen anything, actually someone's just asked a question, so I'll go back to that. Someone's asked a relevant question, so I'll deal with it. How do you pick which MA to use? Was it 200, 500 chosen for a reason, or can it be any MAs? Good question. I chose them not for a reason. I chose them because they're simple round numbers. One of the future webinars, we'll look for it at the end in the list, will show you an implementation of such strategies and how to backtest. And that when you're backtesting, you are running lots of iterations of different combinations. You say, well, let's test for these different. So let's try our trading rule with a 70 and a 20 and a 70 and a 21, a 70 and 22. So backtesting tries lots of different combinations over a time frame you specify, and on a currency pair you specify, and on a period you specify. From that, you can work out, well, actually for that pair, period, and time frame, this combination will work best. And it could be a slow one of 43 and a fast of 21. And so that is how you would choose it, and you can do in the MT4 platform, but that will be something of a future webinar, and I'll point you to that at the end. So good question. Let's move on. And preserving capital. Again, successful traders, they focus on what they could lose first. So it's all about risk management. And if I've learned anything from watching traders, it's that understanding and taking care of risk management is far more important than whether you can predict the markets or not. Because let's face it, a lot of people don't, and even successful traders can be wrong more than they're right in terms of direction. All comes down to risk management. So, as we said, you could set up an algo to limit the amount you lose on your account in any day. So say I'm only prepared to lose 8% of my equity across multiple positions on any day. And then again, it's risk management again, which is a downfall of many traders. And we have tools within Quant that help you can achieve that, and we can show you on future webinars. You could also set the amount of capital you want to risk per trade, rather than saying, your algorithm saying, I'm going to, if your condition is met, I'm going to buy one lot of base currency, and always doing that. You could say, actually, I want to have risk management, which is in a lot of our EAs, determining the size of the trade relative to your capital, and that makes absolute sense from a risk management perspective. So, again, just making the point here, you could say, to limit the account losses to 5% of equity. So this is just a simple chart of the equity, and say, okay, I'm only prepared to lose 5% of that. The third one, use of algo trading, is multitasking. So on our example, the moving average one we saw earlier, we were looking at one currency pair, euro dollar, on one time frame daily. But it could be that we missing other opportunities on other currency pairs and other time frames. And of course, watching 6 charts is not easy, and it's a headache. And if you're a man, you're not very good at multitasking anyway, as women keep telling us. So an algorithm can help that. It can move you from sort of focusing on one currency pair and one strategy to scanning multiple currencies and time frames. And naturally, if you're doing that, you don't want to see your account wiped as you open multiple positions simultaneously. And why would you would use a simple money management algorithm on your account as a whole to ensure that, again, the risk of all those trades is managed. So another sort of third simple way that algorithmic trading can help on your trading. So this is why you don't have to program. I've done some programming over my career. I wouldn't say I'm a programmer, and a lot of you will have done no programming, but it doesn't mean that using an algo approach is out of the window. I've tried to avoid using jargon on this webinar. So if you on MT4 platform, we call them expert advisors and use the MQL4 language to program algorithms. Also within CTrader, there's Algo, which is known as, we call them robots, and use a different language called C#. So just to introduce that jargon to you now. So 3 ways that show you why it's not as hard as perhaps you think. The EA library we launched back in May or June of last year, I think, where we are running expert advisors on real accounts. So I know this. If you Google expert advisor, it's an absolute nightmare trying to sort the wood from the trees. So these are ones which we've built ourselves, ones which are external and might be paid for, which we're running real time. So within this, you can go in. I'm not going to do it now. I'm going to do it on the next webinar. You can go in, download, and bring into your own trading platform a whole multitude of expert advisors for the MT4 platform. They're back tested, so you can then go in and look at the backtest results. Again, from our moving average one, it will be a backtest that is determining what is the best combination of moving averages, the slow and the fast, on a particular currency pair during a particular period in a particular time frame. So that means that you can get one of these downloaded, up and running. You'd still have to, we always emphasize, don't just upload it and press go and think it's going to make you lots of money. You still have to, it's like a small child really, you have to look after it, nurture it, understand it, and feed it, let's say, and by that I mean sort of eye it and back test it and ensure that it's still working, and get it working on your retested on for the current time frame, etc. So there's work to be done, and that we cover that in future webinars. Someone else just asked a question which actually segues very well into the next bit. So the EA library, yes, that's for people who are too scared. I don't want to start programming. If you have an idea in your head, then someone just asked the question, can we create our own EA? Which is why the question segues very well into this, because that's why we built FxPro Quant. You can create your own EA. You can start from scratch, and you can, within MT4, there's a very simple sort of template, let's say, from which you can start programming. But again, I think it's difficult if you've never done it before, which is why Quant is good, because you can visualize a strategy, build it visually, and export the code, but build it up and put it onto your platform. So from here, actually, if you wanted to create one from scratch, probably, and you've never done programming, Quant is a better way in, because you're deal with it visually, get the code from there. You can then tweak the code in the MT4 platform and look at it, and then you'll start building up your understanding. It's a far easier way to use Quant and then get smart and then adjust it than trying to learn MQL from scratch. I know nothing about MQL. I've done some programming. It took me about a whole day doing nothing else to sort of build my first simple strategy like this. But within Quant, I could have probably done it with knowing nothing, probably within 30 minutes. So this is our, sorry, I should have explained that chart. So this is our simple MA strategy from earlier. It's just showing these are the conditions. This is just a number here, so you can go in there and it's just a number. So our fast MA was 50, our slow MA 200. So this goes into this fast MA, slow MA, and this is decision fast above slow. Is fast is above the slow. We're doing this, we're closing the sell trade and opening a buy, and if the opposite is true, which is a condition you can easily set in there, say if the opposite is true, then we're going to do this, we're going to close the buy trade and open a sell. Another question, did you say Quant exports to MT4 stroke MQL? Yes, Quant is a tool which, yes, is built for MT4 to export code which you can then simply import into MT4. Again, that's something we can do in future webinars, so let me just address that at the end and we'll find when that is. Another question, how to set up micro lots or variable for change the lot size. Again, that is possible within Quant. There's money management, so you can say you're going to set the lot size as a proportion of account equity. It's not something I'm going to cover today, because it'll be covered in the future webinars where we sort of deal with Quant in more detail. I'm just going to again, I can't multitask, I'm a man, is actually get the webinar list up, but I'll do it at the end, so we can walk through that and I can tell you which webinar will cover that. The 10th, my colleague tells me, the quant webinar is on the 10th. So get your diaries out now. So okay, it's 2 days time. So on the one in 2 days time, which follows on because we're very smart and we sort of do dovetail these webinars to make sense. So in 2 days time, we'll look at these things. We'll look at the exporting, how you'd export it, as someone asked. It will look at how to set up micro lots, for the varying lot sizes as well. So that's coming up in 2 days time, and I'll show you the schedule at the end. So again, this strategy you'll find in the library, which is available from FxPro Direct. You'll find it in something called MA Simple, if it's still there. I'm pretty sure it is. And the final thing is FxPro Super Trader. So if you think, I can't be bothered with MT4, I like the sound of algo trading, but I also can't be bothered to download strategies, import them into MB4. Look at FxPro Super Trader. This is running algo trading strategies, backtesting them, both ones we've created internally, also one that we've got externally through various means, and also backtested and done a lot of due diligence on ourselves. So this is not on a platform at all. It is a platform that we've created that allows you to follow strategies, but also with, I think, more crucially, it has the risk management tools within there. Say, okay, I want to put follow a strategy. Say this strategy, you wanted to follow it, but have a trailing stop that ensured that once you'd reached here, and if you were its count equity was falling, you'd have a sort of trailing stop that would then cut that out. So it allows you to follow a strategy, but also put your own risk parameters on there, because as I said before, I'll probably say again, risk management or bad risk management is the downfall of a lot of traders. So it allows you to do that to what you want to do. So say it allows you to access and allocate funds, set the risk levels, and also we're constantly changing this and adding to them. So you can go to the FxPro homepage and access Super Trader within there, or you can do it from within that. So let me summarize, and just where are we now? 2 minutes to go. So I'm just going to summarize and answer some of the couple of other questions that have come in here. So really, this was a basic webinar. For some of you, it's probably too basic. You are jumping ahead, but that's fine. And we're going to tackle a lot of that on Thursday's webinar. So if it was a bit too basic, I do apologise. But hopefully I've satisfied some people, and we're going to move on very quickly in this other webinars. But I hope I've shown you that it sounds scary, but it's not as frightening as it sounds, and you can get involved with no programming logic. I've hopefully shown you the main advantages of algo trading. Principally, it's trying to move us away from the human failings, and become more successful traders, because a lot of them use at least some element of algo or rules-based trading within their trading strategies, and hopefully showing you that it's the simple examples of how it can be used. If not, I wasn't here to show you the how-to step by step, which we'll do later this week. But also hopefully show you they don't need to be a rocket scientist, a PhD in mathematics to get involved. And I've shown you some of the simple next steps to take, being it looking at the library, etc., and Super Trader, and also Quant. The next steps, an algo playlist on YouTube. We're also putting these webinars on YouTube. We were previously recording them in the software which we used called WebEx. Proved a bit clunky, so like today's webinar, we're building up a library on YouTube. So if you Google FxPro marketing on YouTube, you can see our channel. There's a webinars playlist, and so we're building up on their webinars all the time. That we're trying to keep to 30 minutes, keep them short, and put links in them so you can jump between sections on them. You'll see the FxPro library tips and tools analysis section of our website as well. And as I just go onto here, and as I speak, let's find the webinar list. Here we go. So you can see here, here's the upcoming webinar. This is today's Friday's Building a Trading Strategy with FxPro Quants. A couple of people were asking about quants, so that's 4 o'clock UK time Friday. That'll show you much more hands-on with quants. So if you have questions on that, it'll also cover in terms of micro lots, etc. And next week, the fundamentals one is really taking a totally different stance. So looking at what's driving currencies at a particular point in time. Oleg's looking at money management, which again is the key to trading. I think proper running money management is where a lot of people do fall down. Gosh, it's busy next week. Oleg's busy, isn't he? And Wednesday he's doing CCI MACD strategies. So how would you create a strategy? Using again, just it's basically not chosen because it's good or bad. It's chosen as a way of building a strategy from scratch and walking you through. So those are Tuesday and Wednesday, especially Wednesday and the Friday ones. Friday and Wednesday, the ones that follow on from this really. So register from here, and that will take you through. So questions, as I've said, a lot of you found them already. The questions thing that'll drop down at the top, you can post in there. Right. Let me deal with the questions. My colleagues remind me quite soon. So this does refer to MT4. Quite soon is going to be available. The FxPro quant tool that allows you to build visually will be available for C-Trader C Algo very soon. Okay, someone's asking about is there an archive of webinar training for beginners? Again, on our website, you can see the older recordings. So two things. On here, you can see the recordings, previous webinars here, which we did from the early ones. You can access the previous webinars, but as I said on YouTube, if we go on YouTube,
discover a pioneering Forex investment platform from the best FX broker of 2013, FxPro Super Trading. Discover a
So somewhere here you will see a webinar playlist, which, there you go, webinar. So we're building this up. We'll put today's webinar on here. So you'll see the webinar playlist here that you can get involved in. Okay, I'm not sure if there's any other questions. Are these? Hang on, let me just. So I've done that one. Are these all available? Super Trader, etc. on demo accounts. Super Trader on demo. There is a demo version which you can access. So if you go into the front page, there's a demo version you can go in and play with. It doesn't allow you to, from memory, to access the latest version to sort of apply money, because essentially, the strategies are all there. So we don't have a sort of demo version in a simple way you can do there, but there is a demo sort of version you can go onto and sort of to explore before you sort of create a live account. If I write to you, can we answer with questions? Yes. Do I have the address at the end of here? easupport@fxpro.com is the address. If you can sort of general questions. Someone's asked, how can the new algorithm be uploaded on a demo account? Not going to do that now because we've overrun with time, but again, Friday's webinar and also the one next week on the CCI MACD will cover that. But yes, it's very easy to upload on a demo account. We'll cover that there. Will any work simply and cheaply on MacBook or iPad mini? Just think of the best way to answer this. Not directly, no. we have a VPS service. If you wanted to access it, MT4 is a PC-based software, but nevertheless, if you built an algorithm and had it running, you could access via an iPad. I'm just thinking out loud now, via sort of the remote desktop or a Mac itself. But so you're not directly using it, but there are ways around that, and I think the VPS service would be one of them. Someone's just said just a more practical exposures are needed. Yes, this is a very, very introductory webinar, so watch Fridays and the one next week. Go to the list again to catch up on those. Okay, and no more questions. I have to run. We've overrun a bit, and I thank you very much for your time again. I just emphasize, go to the homepage, go to the list of webinars, and the one on Friday, the one also next week will follow on from this and show you a lot more hands-on how you can get these things working. So I will thank you for your time.